traders, good morning. This is the Saturday, the 15th of June. Welcome to the channel. I want to catch up, and meantime catching up, I'm testing a camera, a webcam I purchased, and I'm trying to find out if it's going to serve me well in my better presentations, and especially when I will be going live trading with you. Welcome. This is a short video. I'm greeting you from Suriname, and I want to go to the chart, but not before I have this disclaimer before you to read and to be aware that trading does involve risk, and if you will take a venture, or if you will start this journey to learn how to trade, your number one task is going to be how you preserve capital, how you keep the money that you make, and then that is by and through money and risk management, sound money and risk management, and then with a consistency try to preserve that capital, but try to make more money, to increase your capital. Yesterday I did not end the week well. I was not in sync with my own analysis, what was a terrible thing for me, and also with protocol that I had in place, have put in place. The first one that I think I can go to the chart to give some brief, not review, but what happened yesterday to me. And I am not discouraged, for we traders have a saying that we are a company, traders are a company that manage losses, and as we enter into a trade, we enter the trade, but in a way that we have give control to the market, and the market will eventually do what it must do, and we are content. We are not afraid of taking any losses. Yesterday I was stopped out of two trades, and actually I was too overconfident. When the market opened, I entered the market on the market open. I saw this rally, which is a Judas swing, initially, but in this big picture, if you look at it, you see the market maker buy model. Finally, at the end of the day, this is close shop, this line, close shop. At the end of the day, price did complete this model, but during the day I got stopped out, and I reached my daily drawdown and my limit, and I closed the chart. I think I recorded that somewhere, or I just put it in my logbook. I saw this original consolidation from the London session. I saw the original consolidation, actually the stop rate, small stop rate, and then the original consolidation. This is returned to the base, like it returned, it left and returned to this base. Here you could have said it is number one stage of accumulation too, and then you have the second says, which is normal, what we can see as stage 1. Stage 2, this allow I draw it to the other side. Stage 2, and then I saw a New York opening, this market reversal pattern, which is a high, a lower high, a breaker. This is, if I put here, you have high. This is a breaker. These candles are breakers. All these up close candles are breaker, and really price have not go and pass that breaker. So I think I enter right here, right at the opening, the equity opening. When I saw this, I opened having this volume imbalance as a PDRA that I have listed to protect my stop. I did not want to see price go there. I saw price was accumulating and wanted to see price just straight to this, accumulate to this BASI, or at least maybe with a small spike to hit this you call it this volume imbalance. My stop loss I had set my stop loss to include this volume imbalance, but it did retrace deeper, took me out, actually respecting the bearish order block, returned to it, and the afternoon after your lunch, it gave us the run to the original consolidation that I had expected to receive right here. The reason why I had expected it to be right here, that is nice to elaborate on, is because I was thinking that we would have collapsed after the lunch hour toward 30% or more of the week, meaning that if you go to the weekly candle, we have expanded, we have strongly trade bearishly. So I wanted to see the TGIF column TDIF from here to there and 30 or 40%. I was expecting that. My analysis on the day before yesterday, the day before yesterday, was also pointing that we may reach this consequential encouragement and then collapse further, hoping that we would have reached this BASI. It did not work out like that, and that is an analysis. It is only an analysis and approach to the market, to your tape reading. But finally the market will trade as it trades, and I think that algorithmic trading, algorithmic way of trading is the best way to algorithmic trading is the best way to approach the market, and it is the best style. You know that is, I'm saying that with a bias because that is what I do. There are other systems, other models that people are deploying in trading, in general. For we all have our way how to skin the cat. They usually say, and I think algorithmic trading is the best way to do that. So back to the 5-minute chart, which is my hunting chart, and this is where I saw this drop. This drop took me out. It was a sudden drop. It was at the I think I wrote somewhere, I want to see what they will do with this macro, the 10 to 10 and 10 past 10 macro. That macro has been used to drop lower, took me out, and then they practically consolidate, keep on hitting higher, and then finally in lunch hour they start going to the original consolidation. This is a market maker buy model. It has become difficult because of this, maybe because of the dynamic of Friday. I had expected it to run from this candle up right to the consolidation, and the reason is that this pattern, if you have a down close candle, if the bias is bullish going up, and you have a down close candle, you see the next candle beside it, the next candle trade press it open and close above the mean threshold of this down close candle. The candle to its next order, the third one, will expand going higher. I have used that pattern, candle pattern, a lot of time, and it is one pattern that I trust as I read the tape. It did not work out like I would like it to work. Now gaining more understanding that if I use this pattern and I see it close below the main threshold, even if I see this rally up, I will expect price to make another return and maybe gain from this Judas swing, this false move down. I was also looking at this reclaim block and this order block that became also reclaim block later on the other side, the buy side delivery. I don't know if this is the reason why they stop it here. I was a little bit discouraged yesterday, because this is the model. The model finally it has paint out, but not at the time that I was expecting it. Now that is really what a trader is. Algorithmic trading have to do with time and price. Our model come into play in a certain time slot, time window, and we expect it to happen. If it don't paint out, if it have not, if it is not there, then all you do is you need to close the chart and relax. I could have taken some profit here. Then I saw this rise from the I could have taken some profit right here, but I wanted to complete the delivery, and finally I got violently stopped out. Not scared, because this is just price fluctuation. I was happy though to see that my reading was well, that I have seen this model right. So this weekend I will be studying the theory around market maker model much deeper. I will be reviewing the back testing, the journaling cases that I have, and I will back test this one. And yesterday, as I mentioned in the video from yesterday, we had one too, that is this one. I will look at the difference between this market maker model and the one we had yesterday. I will just compare the difference and log them, make sure I have them in my logbook. What I will be doing, I think I will be reviewing a high frequency trading algorithmic model that I want to be using this coming week. I will be going to the micro contract again, micro contract for micro ESM, micro contract again. And here what I will do, it's the same that happened when they violently take me out. Here we see the office shift in market structure, low risk buy, and here I had expected a strong run to take the original consolidation. There is a character, the micro, and the painting in the micro is much more violent sometimes, but the risk is smaller. So I want to take this time to say that's why you have not have a video yesterday. A little bit tired, my mind was not sound to do recording. So this morning I do that is what I will be doing the weekend, trying to catch up, live life apart from the chart. Maybe weekend meaning after Sunday, or be just before Sunday, when I will be doing the high time frame analysis. We all have make higher high. It is on the weekly chart. You can see that we have make higher highs. We have again make higher high. So we'll be looking for the market to trade into the range, and then apply our principles, or we will trade nimble with the market maker, continue going higher. The time of the year, actually about this time, this is really where we expect rally up seasonally, but that followed by a bear low, or a seasonal low after the spring high. Then you have a drop to the seasonal low around this time. You see like a consolidation to another low in summertime to follow, and then the rally. So this what we are seeing here is not normal, and it is also not a normal year. It is election year in the United States, and that does have influence on how they predict price, how they project price. And we will be trading what the market is giving us. That is all we need. We are approaching the market first, tape reading it, and that is what the channel is talking about constantly. I'm pointing my viewers to tape reading first and foremost, and then you can take demo trades or then you can trade with live. This is a small video I wanted to record, talking about yesterday my experience with the market, but also testing a device. I'm not too well with it. I will test it. If it is right, you will see this video on the channel. If not, I will just drop it and leave this record, and leave this device, for I am not yet familiar with it. I'm saying I want to greet you once more from Suriname, and then me, Algo, and now you are helping to write our logbook 7. We have covered already 2 weeks in logbook 7. Next month we will have logbook 8.